I'm very excited to welcome today's guest because without even a high school diploma, he became widely known as the Wall Street whiz kid for some incredibly accurate calls. And he's continued doing that for the last 40 years. He's made and lost millions more than once and has been very open about the dark side of the investment world, including his own battle with depression and a lost will to live. He has been a gold bug since 2018, which has worked very well. He's been a uranium bug since late 2019, which again has worked very well. He even rode the copper bull run until most recently near its highs. Now he says we're in the middle of the greatest financial bubble of all time. And he's built up a large cash position on the belief that these assets are overvalued and overpriced. So welcome, Peter Grandich.
Well, thank you for having me, Elliot.
No problem. So just in a few minutes, could you just tell us a little bit about your 40-year career?
Well, it's hard to put 40 years in a couple of minutes, but I've gotten used to doing that. So you're right. I didn't finish high school because of an incident, not because of lack of understanding education, but I would enter Wall Street after turning a small sum of money into a large sum as an individual investor and then lose it through a penny stockbroker. And I started an investors club, and some folks came along, including a gentleman who had a small brokerage firm, told me I should be in the brokerage business. And that's how I entered in March of 1984. However, by June of 84, if not sooner, I wanted out because I couldn't cold call. Back then, that was a lifeline to a stockbroker. And the first person that hung up on me, I was done for the day. So I actually started a newsletter figuring if I put my comments on the paper, people who read it would call me. And that allowed to a very quick rise. By 1987, I was head of investment strategy for a New York Stock Exchange member firm, and I would put out a forecast of a coming crash. Now, it wasn't so much the crash forecast that got interest, but the fact that the firm wanted me to retract it or resign. I didn't. October 19th, 1987 came. And then the day after the crash, I made a forecast that the market would gain back everything it lost and then some within 2 years. And a gentleman at the name Steve Crowley, who was the business editor of Good Morning America at the time, picked it up, asked me to do an interview, and kind of the rest was history. He gave me the moniker, the Wall Street Whiz Kid, and I milked it for a lot of decades. So by the mid 1990s, I was already I was running some hedge funds. I managed a mutual fund that bared my name. And at age 39, I reached what I thought at the time was the American dream. I had millions of dollars, 5 racehorses, 2 race cars, and took up a terrible male addiction called golf. And I became somewhat of a peg in the wheel of the gold mining industry. So I was speaking all around the world. And then by 2000, gold collapsed to under 300. And with that went most of my fortune and also my mind. I suffered the first of 2 debilitating bouts of depression, panic attacks. And I would meet a man in early 2000 who would eventually, 13 years later, I would buy completely into his belief. But I would meet a man that would kind of change the way I looked at finance. And at the same time, I became involved in my Catholic Christian faith in earnest for the first time. And I would enter into business with a former New York Giant football running back and start a sports management company for athletes, Christian athletes, to handle their finances. And then in 2003, I would return back to gold because if you can believe it, we got excited. It got above 350. And that back then was a lot of excitement. And so I started working in the gold market again while working with athletes. And then in 2008, I would suffer, this time without any financial loss or loss of job or loss of love or anything, a truly debilitating depression that hospitalized me. And I really lost my will to live. And it was then that I finally gave up most of the things that I think prevented me from living a fulfilling life. And after that, I lasted a few more years to 2013, but I decided at that point to leave the metals and mining and focus on my sports business. And I stopped publishing newsletters. And then in 2018, I found my way back to gold. And that led to me getting involved in other things. And here we are today. And I think that was pretty good, 40 years and 5 minutes or less, Elliot.
Yeah, no, that was great. And again, I've just been so impressed by the calls you made recently. They've just been totally on point. So, before we discuss specific markets, can you just describe a few reasons why currently you're bearish? on almost all financial assets?
To start with, and half the people won't care in this answer, but I need to give the very top one. I believe from a spiritual basis, we're in a battle between good and evil, and there's a lot of reasons from a spiritual angle. That's my first reason, and I'm not here today, nor do I expect that that's what you want on your interview. But from a secular viewpoint, I have stated that we were going into, and we're clearly into now, the worst social, political, and economic period in America's history. I would say I wasn't there. I read something about it, but perhaps during the Civil War, we might have even been worse off. But I don't think we're more divided as a country in our entire history, other than when we started the revolution and then the Civil War. So socially and politically, there's no middle ground. You're on one side or the other, and there's just distaste and distrust. Economically, there's a separation too. Somewhere between 1 to 10% in that area, people did really well, especially through the pandemic. The wealthier got much, much wealthier. But the lion's share, most people battled to stay afloat, and a lot of people lost ground, and some really lost businesses, lost jobs, et cetera, et cetera. And during all of this, there's been an almost complete ignorance of perhaps the most critical economic factor, and that is what has happened to debt. Forgetting for a moment from a spiritual standpoint, there's no supporting of debt if you're a Christian, if you believe in the Bible and all this stuff, but just looking at it economically, we're now at about $30 trillion based on Biden's latest plan of hard debt, but that's not really the debt level, Elliot. The true debt level should account for Medicare, Medicaid, and Social Security payments in the future, because there's no money sitting anywhere waiting to pay that off. However, the United States was smart enough that it didn't require its own self to do what it requires businesses to do. As businesses, we have to keep unfunded liabilities funded, but the United States doesn't. So the real level is 100 trillion or more, but just let's look at the 30 trillion for a moment. 2019 was the last time we had a true economic period without being interrupted by a pandemic. We did about 3.5, 3.6 trillion in tax revenue. That's what the government took in. That was its income, supposedly. We paid about $440 billion in debt. It's about 12 to 14% of our income. Well, if we get any kind of return to any kind of reasonable interest rates, especially in the environment now where inflation is clearly pointing towards 4 or 5, maybe even 6%. Let's just say interest rates go back to a norm, which not too long ago was 4 or 5%. That debt we're going to have, which isn't going away, it's not being paid down at all. Just the interest is going to take up half of our income without paying a dollar for defense or anything else that the government does. It's not spoken of. It's not going to be spoken of. There's no party that wants to go out and talk about and deal with it. In fact, the issue that I have also, Elliot, is if we finally have another financial crisis, the parties can't even be in a room together right now. Now you're going to want them to go in a room and solve a $30 trillion problem of paying interest on. So there's a whole host of things that I can continue answering and take up your whole interview just on that. But that's the single biggest part, then the social and political issues that come along with it. And the last thing that I think is very important is this. I've never seen a level of complacency as I do now, whether at the highest level of professional money managers, all the way down to 18 and 19-year-old kids that started trading markets a year ago. There's a certainty and a price to perfection that leaves no room for error. And if ever I've seen where errors are made, they're made on Wall Street. So I just think it is a bubble. They always go higher and farther. It's been helped by a Fed that's out of control and just printing trillions of dollars. But eventually, gravity takes hold at some level. And when it does, it's not going to be solved in 6 months or maybe even 6 years. I expect it to be a cycle of a lifetime that whoever is around to have to deal with this, which will be either my child or if she ever has children, her children, will pay a much more dear price for how we live than I will somebody in the latter stage of their life.
Yeah, and so we're talking about this unsustainable debt. We're talking about bubbles, which I agree. Every chart is like that, right? It's hard to find anything that isn't like that. And what I like about you is you seem to not really chase, things that are high. You seem to get in early, as you've always done in your career, it seems like. So we're talking about unsustainable debt. It seems like the only way to pay that off is to sacrifice the dollar, right? Totally, in order to debase it and print money to inflate away that debt if possible. And that leads me to metals, right? So you've been a metals and mining expert for decades, but you left in 2013. You touched on this a little bit, but so why did you leave? And what brought you back in such a huge way in 2018?
Well, for a good part of my career, that was a sustaining part of my livelihood, first on the management side and then on the corporate communication side. But by 2013, I concluded Mark Twain was not far off when he said that a gold mine is a hole in the ground with a liar standing over it.
Right.
And the further you go down the food chain, down to the junior resource market, you found more liars. I mean, that's at the bottom of the day, that was it. Now, listen, I always stated failure was the norm in that business. I would speak at conferences and say there's 100 exhibitors out there, and if they all are all honest and sincere, only 1 or 2 out of 10 will eventually find a mine, develop it, and go that further. So if you accept failure is the norm and you're willing to speculate, and I must tell you, Elliot, Wall Street came up with the word speculate, so it doesn't say what it actually is, and that's gambling. And when you gamble, you have to be mentally and financially prepared to lose part or all your sum of money. And so I just found that industry had gotten to a level where it was very tough to try to be straightforward and candid. They used to say that my disclaimer was bigger than my reports because I try to make everybody fully aware of everything. And also, I was pulled back finally to get in fully into what I told you earlier, the gentleman that showed me a different way of handling finances. And plus, I was still very, very involved with professional athletes and having a sports management division and doing all that stuff. So I just exited. And then I didn't really look at gold until about middle of summer 2018. And I didn't even realize it was down under $1,200. I really was not watching it at any level. And when I started to look at things even back then, and knowing what I thought was happening with gold and all the things you discussed, the dollar and economies, I made a decision most people shouldn't, and my wife certainly didn't want me to, and that was I bailed out of my general equity portfolio and basically bought a gold portfolio, whether it was some physical bullion, things like GLD, and then a wide variety of mining shares. In fact, I became the second largest shareholder of a company back then called Teranga Gold, which has since been acquired. But so that was what swung me back. And I said it could get back to 2000 and a new high. It did. It's since pulled back. And then when it got under 1700, I backed up the truck again until the other day. And as we speak, I'm just amazed that the correction now might be just a day. That's how underlining strength now, I think, is in the gold market. And I'm more positive than ever that my claim that we're going to get back above 2000 is here. Just watching as we speak, just how this market has rebounded after a $40 down day. We used to take months to recover from that. Now it's just a matter of hours.
So it's good to know you're still bullish because you got in very, very early, almost at the very bottom recently, the most recent bottom. There's really great timing on that. So it's good to know you're still bullish up here, which means there could still be upside. So moving on to another asset that you called very early, uranium. So in late 2019, you said you were buying it in a big way, which is obviously a lot lower than here. So and back then you thought it would be the biggest bull run that you were ever involved with in your entire career. So can you tell us more about like uranium and why you continue to have such a bullish stance on it?
Well, I might have touched on 1 or 2 junior uranium stocks before that, but I never had any experience, knowledge, or interest. However, I was watching one of the interviews on, some YouTube, some broadcast that I watch from some network, and a young man came on and he started to talk about the dynamics, what uranium had come to, and the need for energy and all. And I said, I didn't realize it had gotten that, that low and that unfavorable. There were always a few people, I don't need to name them, but they were always touting uranium. These were the speakers that, no matter where we went in the world, it was always the same 7 to 10 speakers. And there were certain ones that were always touting it. But even when I went to see what they were saying, they kind of moved away from it. So I started to do my due diligence, and I just saw an unbelievable perfect, near perfect storm forming, a tremendous drop in supply, which will not be able to be turned around anytime soon, a clear evidence that whatever social views of nuclear and all that might have depressed it years ago were gone, and people around the world, especially out of North America, were very much back into uranium and nuclear energy as a way. And then to see that there were, you can count on one hand the major producers. So when these utilities need to go and buy it, there weren't that many people that they could go to. And so I just said, boy, this could be the biggest bull market that I'll ever participate in. And I jumped in with both feet. I bought most of the seniors and the ETFs, but I took, some shots in juniors, but I focused and I made Cameco my bellwether. I said that if this works, this company will benefit it among the most. And have ridden it up. And at first, the first leg was just some interest returning. Now, because it's gotten some news, there's been a minor institutional interest, but the real fun and the real profit potential is going to come with the spot price starting to move up, which it's just starting to do. And once that becomes in earnest, and it's 31, then it's 33, and it's 36, it's going to be, and I'm not the originator that said this, but it's going to be like people going through a straw. And I just think there's still so much upside, even though I have narrowed my focus because of my own personal situation, age, risk, that have you, to mostly the producers and mostly Cameco. I still own every share that I own in it, and I expect to for at least a while. So I think if you said to me, pick of all the markets, being long or short, what one do you have the most certainty that it can reach your expectation? It's the uranium market.
Actually, just thinking about that. So do you expect a correction, though, as part of the financial bubble that we're in? And would there be a better entry point than where we are now?
Good point. Here's the two caveats, and I'm glad you brought that up because I should have brought it up myself. The first is the market swoons down. They will initially swoon with it. Everything becomes liquidity, even gold. Okay, if there's a crash or a huge, quick swoon down. They all will have corrections, but the least likely to stay down and the least likely to fall in a percentage as much as other things that are way overbought will be the uraniums. And there's such a limited amount from the producer side. Institutions, especially utilities, are not going to first run to the juniors, somebody that may or may not deliver the uranium 5, 7, or 10 years from now. They're going to want to go to the people that can do it now. And you can count on your hands the public companies that you can buy that are producers of uranium. And that's why I just said there's never been anything like that I've seen, that I can have such a small group with such a keen interest. And remember, to the utility companies, whether they pay $30 a pound or 60 is not going to dramatically change their earnings at all. But to the producers, the people that sell it, it's like night and day. So yeah, there'll be corrections and there's a chance for a swoon. But outside of that, and God forbid another nuclear accident, because then all bets are off, because the social and political issues will turn on it again. Other than that, I really can't see how we don't reach the goals that I think they can get to.
Great. And just touching on another call that you made recently that worked out well, right? So you've been quite bullish on copper, but then the price reached almost $5 a pound, and you sold all your copper stocks, like at these lofty levels, which did really well for you. But why did you sell at this point, and do you see yourself going back in the future?
Well, I sold not because I don't think so. So let me take a step back. I was not early to the copper move, but I found a young man. He's the CEO of a company called Copper Bank. I think his first name is Giovanni. I can't remember his last name. I've watched him a few times on different interviews, and he made such a startling argument for the coming electrification and what that was going to mean, and certainly past the likelihood of my age. At 65, I'm not likely to see 20 or 30 years from now, and if I do, I may not even be able to see it physically. But the bottom line is, there certainly was a great argument for that, and then he demonstrated it, to me at least, that the ability of the main usage, which is copper for electricity, and the availability that's going to be around uh, just demanded that these things go up. And so I got involved in them. I got involved in a junior, and it literally doubled in a week or 2 weeks. And I took profits, and it's since tripled since then. So that saying it never hurts to take a profit, I actually proved wrong, because it did hurt to take a profit. But because when we got up towards there, I had a feeling, and I speak mostly through Twitter now. I stated that I know the Chinese, they're not going to be happy with a $5 plus copper price, and iron ore was going through the roof and all. And I said they're going to try to talk it down. Plus, I wanted to build a cash. I have in all of this, even though I was bearish on the equity, I was always putting my cash fully into something else. But now I felt I'm going to need cash just to start building, because stocks and bonds are way overpriced. They're going to come down hard, in my view, in the next year or two, and I need cash to be able to. So I used copper as the reason to take a profit. I said I think it could pull back all the way maybe to 4. If it did, I would apply that cash back into it, because that'll be the downside risk to it. But if you said to me, what's your least favorite, if there's such a thing, of the 3 or 4 things you really like, it would be copper. But don't take that as anything demeaning. It still has a great argument for the future.
Gotcha. So you're just waiting for a better entry point, essentially. Because
if it comes, and if it doesn't, so be it. Can I just say this, Elliot, from experience? There are no boats. I just want to tell you, viewers, if somebody's telling you better get on board, if you don't, you're going to miss everything. There's no boats in investing. There's ferries. One goes out, eventually another one comes in. So you don't have to chase things. You said I don't. I had a great mentor in the early 80s and 90s. He's passed away a lot of years. He was a wonderful newsletter writer, right out from not from where you, too far from where you reside, named Kennedy Grandich. And Kennedy had a lot of great sayings. And one of his sayings was, I'd rather be a year too early than a day too late. So I tend to be early, but it's okay, because eventually you make whole. If you're late, you got to wait a whole cycle to get back. So that's one of the things I try to live by.
Yeah, that's my absolute favorite way of investing. And it's really worked out for you, because you bought gold when it was hated, and you bought uranium when it was hated. You got into copper, not crazy early, but you did well on that. And you're leaving it at the highs right now, which is really interesting. And investors should take note. So another incredibly great call you made recently, just blew my mind, was Bitcoin, because you were neutral all the way up to 65K, right? But then at that price, you issued a bearish opinion, and you said sell all your holdings in Bitcoin, because you said it was the greatest hype in Wall Street history. And here we are, down 50% from there. So like, another great call. So could you talk a little bit about that?
Well, I used to refrain from talking about it, because there's a mania in it. Let me take a step back, if you don't mind. I'll use you, if you don't mind, as to really give a full explanation. I think it's worthy, and I think you and your listeners will appreciate it. I was never against the new technology of blockchain technology and cryptocurrencies, even though I don't believe they should be called currencies, but they are a new investment pool. And I think, like the internet, when it first came out, everything went crazy, and then there was a shakeout, and a lot didn't make it. But out of the ashes grew some fantastic companies, Amazon and all. That's what I think is going to happen with cryptocurrency. So I don't think it's a fad. I don't think there won't be no cryptocurrencies in a few years from now. But I maintained a neutral position, because I kept saying to everybody, I don't know it well enough to give you an honest opinion. I don't know whether Bitcoin or this other coin or this is a better choice and all. But what happened was, I still have a business. I have a planning group that works mostly from a cash flow perspective, and it's only interested in retirement, business, and estate planning. We're not market timers or anything of that nature. But I was meeting people, and they keep telling me, wow, I'm up 5,000%. I'm up, and I'm buying more. And that just scared. I didn't mind them being up 5 and 10%, 5,000 or 10,000, and wanting to hold it, but to keep buying more. But what really got me to change is, there's a man, and I don't want to use his name, that's synonymous with Bitcoin. And he has been out telling people to mortgage their house, mortgage their business, buy Bitcoin. Don't even buy any other cryptocurrency. Just buy Bitcoin. So I kind of grew up in the 80s and 90s, and it was so eerie that it reminded me of the days of the penny stockbrokers. And those were the same things they were saying to people, and projecting things to go up from $1 to 20 and 40. Well, now people are talking 500,000, a million, 2 million price Bitcoin. And we used to throw people out of the business without giving people even the slightest disclaimer that there is the potential for it to actually lose. So it came to me, and I called this, and of course, this is what I got the hate email, and I actually got a death threat. I called it like the pet rock. I mean, it was insane. If you were around the days of pet rock, people were suddenly rushing out to buy a thing that literally was just a rock.
Wow.
And not to say that that's what Bitcoin was. And then there was another fundamental argument. People would use the argument, well, it can't produce anymore, and they were beating it up on gold, and the reason they beat it up on gold was they knew they could never take a lot of money out of stocks and bonds, but if we could take 2 trillion of the 12 trillion that's in gold and get people into Bitcoin and all, we can make a lot of money. That's the Wall Street mentality, I believe, was. But the thing that really started to get to me is people didn't realize that if Bitcoin was the only cryptocurrency, then that argument works. But there were all these others, and many of them looked better. In fact, it's never good to be the first one out in technology. We've seen that before. So my argument was there was no other reason to still own that. Please take your profits, distribute it among others, get more widely distributed. You were meeting people that just owned Bitcoin. And that was really, the reason. And the last reason, and the most important, all the regulatory people, the powers that be in government, in banks, not one person was positive, and many were talking negative. The Bank of England, the European Bank President, India, China, none of them were talking in support of it. They were kind of talking, they were setting up to kind of compete with it or vote, be against it. And with that and the big gains, and as you said, the parabolic rise, it just smelled that it was time to take profits. And that's what generated that. There was nothing to gain for me. It wasn't I was taking these people money and then putting it into something else and I made a commission or something. It just seemed reasonable and right. And now, there's a big convention going on today and tomorrow in Miami. And yet we just had, Teflon Musk, who I think is losing his Teflon, come out. And I think he's prepping the market. We're going to learn that Tesla sold some more coins. That's just my personal opinion, because that's the only reason they got a profit in the first quarter, and their sales are starting to tank in China and elsewhere. But having said all that, if the market can't get above 40,000 in the next few days, I think we're going to come back to that 30,000 that it bottomed at. And if we don't bounce at least as high again to where we did, then we're going to break that 30. And I think that market still has a lot of downside risk. So I still wouldn't want to go out with any of my money and buy Bitcoin. Now, if and when the correction comes and they all come down a lot, and I think they'll come down with the general equity market to come down, there's going to be some major winners out of that. But I'm too past to try to figure out what they are. But be careful of anybody that keeps telling you to mortgage your house and mortgage your business to buy anything, even if he was saying that about gold. And I just avoid people like that with like the plague.
I mean, I think what we've proven here going through the last 4 asset classes is just that you have a great intuition for when something's really frothy or oversold. And I really want to thank you for sharing your thoughts on those. But before I let you go, you did mention that you work with some professional athletes. So I just wanted to ask you, like, why, most people dream about working with athletes and sports teams. Why did you decide to kind of go a different route?
So what's left of my work, is behind me. So as I said, in 2000, after my first battle with depression and the first loss of millions of dollars, I got involved in Christian sports ministry. And I was a diehard New York Jet fan, and yet I would meet my future partner who was on the first 2 giant Super Bowl teams. And we started a Christian financial money management company called Trinity Financial Sports and Entertainment Management. Second guy through the door was another giant. And I'm like, I hate the Giants. Well, God, and if I'm going to be working with you, you got to send me. And of course he did. He sent me my all-time favorite athlete of all time, the greatest Jet that I ever think there was, Joe Klecko. And so it developed. And within a year, I met the chaplain for the Yankees and the Giants. And I started to do Bible study and attend chapel and then speak at chapel. And I started to meet players, and they started to ask me what I did for a living. And one thing led to another, and it went well. However, as you know, a few years back, we started to have issues about the national anthem. And I wrote, that I was very strong against kneeling other than for God and country. And so I spoke about that, and I got some repercussions from my clientele and the teams that I dealt with. And I last worked with the Giants in 2015. But when the pandemic hit and the matters that came out regarding Black Lives Matters and how both athletes and teams were embracing it, it was completely contrary to my Catholic Christian faith. And I had to make a choice, Elliot. I can be hypocritical and say I'm this Catholic Christian guy and all this, and at the same time be hanging with people that are ultimately outwardly supporting a movement that goes against everything, against my principles of my faith. Or I could take the hit, shut the business, take a very substantial financial loss of income, and maintain my Catholic Christian faith in earnest. And that's what I chose to do. And so it was difficult. Not only was it difficult not to have the business, but to stop, in a sense, watching it. And my favorite sport, which everybody thought was football because I did somewhere, was actually hockey. To see hockey embrace it was very difficult because I would try to go to any hockey game anywhere. And so it was tough. But another thing came into my life. I got very involved with my wife and I with a farm that helps special needs children and veterans with PTSD and all. And so the good Lord replaced one thing with another. And I still sneak a little bit, look at football, and I still go back to watching hockey because to me, it's the greatest of the four sports. But you have to see it personally. It's not as enjoyable on TV as it is in person.
Yeah, I've been to a hockey game. It's so much fun. I totally agree with that. So anyway, this has just been so helpful. I think after watching this, people will realize that you just, again, really know how to find undervalued and overvalued assets and make a call. So I'm going to rewatch this just to really figure out where you stand on these issues. But, where can people go to learn more from you?
Well, let me first just say a couple of things. As you notice, I brought out that I've not only lost millions once, I've lost them twice. Okay. I've given up being a prognosticator. That's why my book, which we just put out, the 5th edition, is called Former Wall Street Whiz Kid, because anybody that can lose millions not once by twice should not be called whiz of anything. Okay. The other thing is the ultimate crime in investing is not being wrong. I've been wrong enough times to talk to you all about mistakes. It's staying wrong. I think what separated me is I've learned to cut losses or limit losses and have upside, maybe sometimes before some other people and all. But I'm twilight of my career. People are welcome. I'm on Twitter. There is a blog. petergrandich.com is the website. The book can be read on the website for free. The 5th edition is up. If anybody's read it before, there's 4 new chapters, the last 4. And you don't have to pay for it. You can read it online, but it's also involved in Amazon. And that's pretty well it. So early on in my career, second or third year, when I made that forecast, I got hammered because, people didn't like the fact that, you were so bearish and a market crash. And a guy who was on the top of the world back then named Robert Prechter, who's the Elliott Wave theorist, the original guy, took me under his wings, wrote to my bosses. And I said back then, if I ever make it to an old age in this business, if any young people come along and show that they're astute and want to do the right thing, I'm going to help them if I can the same way. And so you got to give me a promise 30 years from now when I'm long gone and there's some young guy that reaches out to you, you'll help him like I came on your show.
Absolutely. No, I really appreciate that. And I think you're going to help a lot of people with this interview. So again, thank you so much for stopping by.
Well, thank you for having me, Elliot. It was a pleasure.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.